let's move on and let's talk about what's going to happen to the markets in a slightly longer term and what to anticipate from the interim budget today. Who better than Ravi Dharamshi right here in our studios? Ravi, hi, good morning. Good to have you as always. What is going to be in focus today? Just the overall market, what the central bank is going to do next, or you think the budget holds any significance?
No, clearly budget this time around is even less significant. But over the years, budget has kept losing its significance as a market mover, as an event. But this time around, it's a vote on account and interim budget, so the impact is going to be even lesser this time. But having said that, couple of key things that we are going to keep looking for is whether we sustain the growth impetus, how much is the focus on fiscal consolidation, and where the priorities lie of the government in terms of spending money. I guess those are the broad themes we will look for to understand whether there is a continuation of what has been happening till now. And for all practical purpose, it looks like it will be a continuation of that. But the real thing will come in July when if this government comes back, the policy stability and budget continuity will depend on re-election of this government. So we will have a clearer picture. See, it's about future and it's about reading the minds of 140 crore people. So you can never say with certainty, even though it looks like the wind is blowing in favor of the current government coming back. So, but that, however small and if, it's something that we should keep in mind.
So what is the next trigger for the budget? When you frankly think about it, whatever bulls ever thought of, they've got it. Lot of local liquidity, earnings, strong growth, stability in terms of taxes, inflation which is predictable, and now the wind, like you said, the political wind is in the right direction. So for markets to go higher now, I'm just wondering what's next?
No, so not all engines are firing. Honestly, exports are not doing very well. Rural consumer is not doing very well. And liquidity is very tight from RBI's perspective. So, I mean, bulls can always ask for more. But having said, I think what we will keep looking for is those sector-specific PLI schemes that actually are yielding good results in some of the sectors, and we would want better implementation of those so that some of those impetus can be carried forward. So, overall, I believe the delicate balance between growth and fiscal consolidation, they are doing a good job of it. Of course, some or the other thing helps. Crude going down helps a little bit. Tax buoyancy has come through. So, the divestments have always been, I don't know why they even put that number, because it's been a total washout for the last 4-5 years. So, that is one area of improvement that they can really focus on. So, if they do manage to collect more money, then there is a scope to spend more money. So, that is what we will be looking for.
You know, and that's exactly the point, that when it comes to divestment, now is the best time that we've ever had to go on and do that.
Yeah,
right?
In fact, last year PSUs have had the best rally. So, one has to be smart about it and capitalize on that. Whether it is PSU banks or whether it is power stocks on the PSU side, they have given the best returns. So, there is a possibility that they can actually get good money, but one has to be smart about it. The execution till now has left a lot on the table.
And given that we've seen that lag in rural recovery, do you think a significant boost to rural infra or welfare could just have a sentimental boost to the markets?
I don't expect that in this particular budget. The government has been very, very focused on bringing the fiscal discipline, and they don't have the room. With the extension of the food grain scheme, I think they have kind of played out their card on the rural side. I don't see, there might be a little bit of tinkering here and there, but the larger path of fiscal consolidation will continue, and this government has not shown inclination to give too much of fiscal stimulus. So, consumption is something that will have probably come into fore maybe 2 years down the line once the capex starts to kind of peter out, is what I feel. So, I don't know. As a thematic, we keep it on our radar, but I don't see trigger panning out in the immediate future.
So I'll put some numbers out on the wall, basic budget assumptions, and let's see what the market expectations are. I'll just come up on your wall and you can actually see those numbers. Fiscal deficit, capex assumption, which is very, very important. That's like the real wind in terms of the market right now. And then what is the GDP assumption? I'm talking about the absolute growth in terms of the GDP assumption. Are we getting the wall right now? Okay. Let's fire the wall. Where the markets are and where the assumptions are. Just bear with me. So Ravi, while the wall is getting loaded up, let's understand what your assumptions are for fiscal deficit and more importantly for expenditure commitment. There you go. Are these the numbers which in line with what your sense is?
Yeah, 5.3, 5.4. So about 50 basis points in improvement on the fiscal deficit is largely what we expect. Capex will be between 11 and 11.5 crores. Borrowing, net borrowing might actually be a slightly lesser number than what this is suggesting is what I feel. And the real GDP growth actually could be higher than this. So you have to understand that this kind of growth is coming despite a lot of the engines not firing. So if there is a pickup in some of those engines, their growth can surprise on the positive side. But from the point of view of what's going to come in the budget, I think this is a fair assumption. The nominal growth expected will be about 10.5%. It will not be too much more than that.
You own a lot of PSU stocks. Last time when we spoke that you said you are looking at taking some chips off the table. Budget, no budget, would you take some chips off the table, defense railways?
Yeah, so I do believe, see, in terms of the continuation of the themes, I seriously still believe that railway, defense, financials are still the theme that will continue doing well. But from the point of view of central government's ability to push capex from this point on is limited. So the state and private have to chip in now. And that does not necessarily mean the current stocks that have been doing will do well. Defense and railway are totally dependent on the central government's budget. So from that point of view, there can be a little bit of reprioritization. And however small the risk of the government changing, it's still a risk. And the other side of the equation is valuation. Those are also getting a little punchy at this point of time. So it's a smart thing to reduce your risk a little bit.
So Ravi used to always use this phrase called khul ja simsim. Bachpan mein Ali Baba Chalis Chor, khul ja simsim. So we've got a simsim here. And what we've done is that for our viewers today to understand this whole messaging, which is that look, budgets are important, they are crucial, but ultimately if this is India's Amrit Kal, stay invested. Then they said, okay, we agree with you, but then the experts have to tell us some hints. So those are the hints we are actually trying to get out. So the hints is what the SIMSIM will talk about. I will walk up to the wall and I'll first recap the experts what they have been mentioning. And we had Joe, Vijay Bhai, Sandeep Sabharwal, and now SIMSIM is going to come from, this is Sanjeev Bhasin Saab's two ideas, Nalco, Hutco, he's also given IOC. Okay, there you go. Television, when you do live, accidents happen. That is what you call is a television accident. Never mind. Okay, now that's Sandeep Sabharwal. Let's look at Madhu Kela and Puranju, and then the Ravi Dharmashi Khulja SIMSIM is coming. Madhu Kela, Shilpa Med, and Jubilant Farmova. अब भाई रवि मधु भैया टिप्स देके गए, तो अब आपसे एक्सपेक्ट क्या करूं मैं SIMSIM जब खुलेगा? What do you think the SIMSIM will have? It's a pre-decided SIMSIM. What do you think we put for you?
I would say you would have put energy transition as a theme and financials.
I told. Let's see. Ravi Dharmashi ka SIMSIM kholo. Khul ja SIMSIM. What do we have there?
No, he didn't really divulge details when we tried. We tried before you
Maybe
came
you need
in.
to do Khulja Simsim here instead of
Exactly. So Ravi, let's try that. Let's
the
try
action
that.
has to be here, in front, not behind you.
Yeah,
Let's try that.
It's right
If
here.
this is SIMSIM, where you have to give money-making ideas, it could be stock, it could be a theme, it could be something which is actionable. See, when we say energy transition, it's a special day, Ravi, so you'll appreciate that, the spirit of budget, right? So take us closer to your thought, which could be actionable. Energy transition is a big theme, financial is a big theme. Let's go closer to it. So that next time when I open the SIMSIM, it's not a blank SIMSIM.
So yeah, sure. See, we have spoken about this earlier also, but if this entire move towards renewables has to pan out, the most critical cog in the wheel over here is the transmission. It used to take 5 years for a coal plant to come up, but a renewable plant comes up in 12 to 18 months time. So the implementation plant timing has reduced by almost 1/3. Now on the other hand, the kind of capex that we are seeing in the capacity side increase is almost 4-5x of what the thermal plant is. So more renewables capacities are coming up and much faster. Now the problem is the transmission capex takes still the same amount of time, which is 4 to 5 years. So we actually need to hurry up the timelines of putting up the transmission capex. And the intensity of the transmission capex in the renewables is far higher than what it used to be for a thermal power plant. So transmission capex is something which is a clear and present opportunity, and it has to be executed over the next 5-7 years for India's energy transition to be successful. Now it is not only India's, in fact even globally the same thing exists. So that I believe is one opportunity within transition, energy transition, that we are
So
very
let's talk
bullish on.
बात करते हैं, and it may not be something which you own. I'm just trying to understand the stock as a benchmark. India's biggest bank, HDFC, right? I'm not getting into whether you own it or not. I'm not getting there, but I'm using HDFC Bank numbers as a benchmark to understand that is it a sector-specific issue now, because if the best franchise in the bank, which is HDFC Bank, both in terms of brand, reach, customer appeal, if they are struggling to get liabilities, could this really lead to a slowdown of this growth in the banking sector?
No, I don't think this is a sector-specific issue. Yes, there are some sector-specific issues, like the liquidity overall in the system is a little low right now. However, whether it is the cost-related issues, technology-related issues are specific to the bank. They are not across the board. There are other banks which are actually doing quite well, and their deposit growth as well as their credit growth is doing very well. So without naming any particular bank, I don't think this is a sector specific issue. And then there are of course merger related issue with the bank in question that we are talking about. So that is clearly not a sector specific issue.
SIMSIM can the energy transition and financials. That's how the SIMSIM will start. So next time when we open the SIMSIM, we can pop up these two names. Ravi Dharamshi, always appreciate your time. Thank you so very much for joining us.